Okay, welcome everybody. Nice to see you all. And what I'm going to do is I just want to look across a couple of the main charts, and then I want to just drill down into the bigger time frames and just look at the bigger picture. We've seen a lot of strength in the dollar, which has had an impact on different markets, of course the dollar pairs. But let's just look at where we are right now on week 11 and where we may be in the coming weeks. So we've got a good non-farm payroll number behind us, which has seen this excuse me, this oil on the 50-cent fibs come up from 48.75 to just narrowly above the 50 level. I am actually holding a position on this that I bought earlier, just in the last half an hour before the pit close. And I'm looking to see if we can get up here to 53.80. My target is 53.80. And if I get stopped out, I don't mind because it's a small position. But tomorrow, if I come to my screens and we are holding 50.50, 51, then I will just keep adding on pullbacks and then see if I can push that into the events on Wednesday and of course beyond. The main pivotal data points of this week are as follows. We've got Mark Carney, Governor of the Bank of England, speaking tomorrow at 2:35 UK time. So we've already seen some early moves in the pound pairs, particularly the pound yen, so we will pick up on that. Wednesday is UK manufacturing, and then towards the end, 2 hours before the US session closes, we have the Fed budget. Thursday, UK trade balance, US retail sales, and then Friday, US inflation. If US inflation kicks in and the Fed budget is fairly good, then I think the oil might just do it. But obviously this is a market that is clearly in a downtrend. Let me get my pen. Here's ways of selling. W bottom. The W bottoms can be lower. There can be lower lows. There can be higher lows. That pushed us back into a resistance area. And at the moment we are just holding this level here over this coming couple of weeks or so. Actually, that goes back to mid-Feb, and really just in a big box. Well, it's not even a big box, it's a relatively small box, but nonetheless a box, and just not doing much. But I'm buying the dip here on the basis that we've had a nice dip pattern here which pushed up into that level, very long, bit more protracted bottom here. So we've got a nice cup here and then potential handle. So just by buying the dips here, getting a stop to break even, or even just keeping a stop tucked away a little bit, just giving this room just to see if we can get this, and that's the sort of neckline. So 51 is going to be the next barrier, and if we get to 51 we could even run into this level here. We've had one, that wasn't quite an attempt, but I'll sort of call that 1A. This is 2, so the third touch of this area could see this push into this area here. So in fact I will increase my target, and if we get up here just manage the stop. As a result of this session I will increase my target. Let's look at some different time frames to just evaluate whether this is a potential good trade or not. So let's start with the monthly. So we did have a higher close in the monthly, and this is a level at which we did come up here from on April 09, but yeah, this could so easily just rotate to the downtrend and come and see 40, and who knows, maybe even lower. But at least there, yeah, that's the first blue bar we've seen since June last year. So it's at least temporarily put a stop to the selling, at least given traders pause for thought. We did not end up with a blue bar last week, but we did end up with a stopping bar, an inverted hammer. And so I'm just looking to see if that can push into, if they can build on that and then at least push into 52.60, and who knows, the top of that box, which is 56.50. In our factors we got in our favour, we have an RSI that was seriously oversold RSI. That's no such thing as oversold. It's, the market will do what it wants to do. But we are getting, you know, like I said, this potential little basing pattern here, as long as we can hold 50. On the daily, we have just about clung on to 50, not much more. It is a higher close, that's all it's got going for it. I've drawn this manual pivot point here, 51. The oil stands a chance if we can just get above that 51. All the time we're under here, all the time you're under the 50 MA, the trend trade is to just short the highs, but I'm just got a small titchy position. It's a market that's been going sideways for a while and may just pull in, so that you can see we're in that apex. When you're in an apex as tight as that, it could go either way. We've got a very strong dollar, so they could just run it into the 50 MA and then just collapse it, just pummel it. And that 45, if you're an oil bear and we see a sell signal at these higher levels, I would short and look for 45. But in the meantime, I'm waiting to see if this apex can hold and give it a little shove into these high levels. You can see why I've got 53.80, because that's a massive daily level. Moving on, let's look at the indices next. And that's a pretty strong, where are we? We've got an hour till the close. No, we haven't, we're closed. What am I talking about? No, we've got an hour till the close. As you were, an hour till the close. It takes me ages to get used to this hour issue. That is, assuming we can hold up here, that is a pretty good convincing suggestion that the markets are not ready to capitulate. Distribution, we had this time last week we had a higher close. We had a bull bar closing at the new highs, and the very next day it closed red. So if ever you get that, that is a clear signal that the markets may not want to hold. So for example, let's look at examples of that. This is, we had some new highs here, similar pattern, and we will close underneath it over the next couple of days, and they dragged it right down to support. This has been dragged down to support, narrowly above 18,000, 17.8, sorry. But it looks as if we are going to hold this level here. If that's the case, I would wait for a full dip back to the Sunday open down there at 17,880, 17,900. But on the face of it, that's a pretty strong bounce. So we've seen this before. We've seen a big Fed day sell-off, all looks as if it's all nice and weak and all going to continue rolling lower, only for it to form a bottom the next day, close higher, and then build up and get a bit of a run. So, you know, with algorithmic trading, picking off major support levels, you know, these markets are different, and you need to work around what the market is doing on the day, not necessarily what you think it might do over the next few days and weeks. Okay, so just as the Dow is picking up a little bit here, so we're also seeing the oil just ticking up a little bit as well. But let's look at the fibs, because I've got a few levels marked on there, but I've not got the fibs marked on this. I'll just add that. If we put the fibs on this last move, we've come into the top of the zone here on the 61.8%, and we look as if we're closing above the 76.4, so that is very bullish. And like I said, I would look for a whole push back into, this is a major area of resistance, by the way, from Friday's 60-minute fibs. This is the low of the 4th of March, last Wednesday I think that is. So see how we close, but on the face of it, that is a market where it's good news is bad news as far as indices are concerned, because they're pricing in a rate rise. But you know, once that news gets digested, then you know, that is the following reaction that counts for more. So let's just look across a couple of other indices and then move on. Any questions, let me know, keep posting. This is the NASDAQ. Well, that's a pretty pathetic move there. That's a potential bearish consolidation. Again, fibs says (50 MA) is a major support. It's 43.35 on this. So we need to keep a check on that, and just to see if this isn't just retracing some of its Friday steps with a view to that rolling over. So how could you tell? Well, unfortunately, you've got to wait into tomorrow. If we close here, this is not a convincing reversal whatsoever to me. This is a situation where we may just wait until we've retraced some of this big seller's bar, and then come down and test these levels here. The same goes for the Dow, as they do ultimately pretty much keep some sort of pace with each other. However, they do get out of sync occasionally. S&Ps quickly, a little bit more like the Dow than the NASDAQ. So the NASDAQ is the one that's getting hit at the moment, today anyway, or certainly a bit of a laggard when it comes to the bounce. Right, let's look at the dollar pairs. So we came into a very decent amount of support. I think that the markets are at the moment just hedging against Mr. Carney speaking tomorrow and giving the pound a bounce. But I tell you what, I mean, if we can start the whole 151, I would definitely swing trade this. However, you know, if we just hit 152, can't hold, then that is a short. And ultimately, on the weekly chart, this is looking as if we could see 148. That's the major support. That's a reversal bar, or two reversal bars on the weekly, huge seller's bar, currently retracing our steps but only retracing into resistance areas at the moment, and a market that could easily, with that sort of chart pattern, come down and test 148. Euro US. A lot of talk about the Euro US hitting parity. I would concur. Look at this chart pattern up here, by the way. Huge, lovely funnel chart pattern, very powerful. That breakdown, once we broke down, there's hardly any blue, not very many blue bars in there. I was going to say hardly any, but there are a few. We are oversold as far as the RSI is concerned, not as far as the market's concerned. And if you pull back and start looking at parity levels, that looks on the cards. And the next stop for me is 107.50 and 105. I will definitely see some hesitation at 105, but that's 350 points, 330 points away. So the way I would play it, if we drill down to a 4-hour chart, we've got dry speaking a couple of times this week, haven't we? Let me just look at that. Wrong. As far as the European data is concerned, we've got Eurogroup meetings today. More meetings tomorrow. French industrial production. I think this week it's going to be less to do with Euro data and more to do with US data. I think it's more going to be dollar strength than Euro weakness that's going to dominate this week. And the key aspect of that is going to be the Fed budget on Wednesday. So that's why we'll be looking to see if this could, I think hopefully with a bit of luck we will drift higher. Yeah, I've got the fibs on this. If we can drift into even 109, which we've seen in the Euro session, 109.50 and ideally 101 into this fib area here, and then get short. We are very extended to the downside, but close underneath 108, and that's toast. And then we are coming down to 106, 105, etc. So short any rallies, 109.40, 101. Otherwise, don't trade it until you get a close under 108. Right, look at the pound Aussie pairs. I've been too slow in looking at a pullback on this. Again, let's go down to the daily. Weekly says two red bars in this cluster. Just coming into resistance there. I would appreciate it, Mr. Carney, if you could say some dovish things and get that down to 192, 192.50. That's the area I was looking to buy. It's bullish but struggling with, and the dollar's killing the gold, so that's why this is so strong. But I've got in mind those lower levels, but I'm not sure based on this performance that I'm going to see them. I think if I want in on this, I'm going to have to buy at a higher level. Would very much like to see 195 again, and we'll have to wait and see if we do. Right, pound yen, a little bit quite like the Dow. This is probably one of the best forex charts out there. Because if we close up here, come back to our screens, and we are up still holding 340, 350, then any pullbacks to 250 will be a gift, and 182 will be even better. But a nice clear pattern on that one. As far as fibs are concerned, so the lows in the beginning of the year were a fib support. The absolute low of that period of Feb 3 was this trend line, and here we are, some weakness, very sloppy trading up until non-farm payroll. They sunk it to a monthly pivot, and then here we are pushing up higher. So I want in on that. Pound yen is my favorite chart. Pound Aussie dollar comes a close second. Alright, and that's pretty much all I've got for you. Any questions at this stage? Aussie dollar left their rates on hold for March, said to be about to reduce either the next meeting in April or May. At the moment their rates are 2.25. A lot of experts are projecting we're going to see rates of 1.75. So any move into these areas here, I was looking for a higher move, but any retest of 78, which is not that far off, could be a good opportunity to get in. 79, anything between 79 and 80 is obviously far better. I'll leave that be. Plenty of time for that to push up. At the moment, not expecting any dollar weakness, so we may just have to get in at 78 if that drifts. Right, and not much happening at the moment. Okay, let's just look at a couple of stocks that I'm interested in. And I want to catch up with Barclays. Barclays has had a good push off of these lows. Once we closed at 230, that was a nice push. Watch out for 245, because ultimately at the end of the year I think this one could do well. This is going to be potentially a good year for banks. So we saw that grind lower, then we saw 200 hold. So any retests of this area here, 230, is potentially a good place to get in. Rolls-Royce, that has been looking good. Nice push up from November into early December. Retrace, nice W pattern, and then push up. US stocks, let's look at the favourites. Goldman's, very sideways. Baidu. Chinese Google. Keep a very close eye on this. Obviously, a lot of resistance up there. We're in an apex here. I think Baidu is very interesting. I mean, those highs are 250. Here we are at 210. So I would be very interested in picking up 206 if we hold around here. So I will be watching that with great care. Apple has been pulling back. I believe the new wristwatch is out now, so we'll see how that goes. And let's look at the Facebooks. And Facebook is my favourite of the SMs. So we've got resistance up there at 82 and support down here at 75. Not a great looking chart, but I certainly would consider a pullback to that area. Let me just find some other, let me find some techies. We're looking a bit vulnerable up there. That's got a bit of a funnel look to it, which could mean it's exhausted up there. However, it comes down to support and holds. Oh, that's Broadcom. I would consider. And typically, in typical cycles, the markets do take a breather this time of the month, and then as we head into the Easter, they do tend to pick up and run into May. There's Rambus. Okay, any other questions? I've been talking for nearly half an hour, so that's a good time to cut off. Just look at a couple of oil stocks. I want to look at the rigs. Diamond Offshore, really not holding up. Parker Drilling. Watch out for these lower levels. At the moment, oil does not look as if it's able to hold. So we'll see. I mean, just narrowly under the 50 mark as we speak. But if you come down to these levels and start holding in the coming days or weeks, again, cyclically oil not ordinarily pick up this time of the year, but the invents supply demand, etc. is not favourable to support the oil price. Okay, I'm going to leave it there and pick up the threads that I started in this discussion, and then update you and pick up on that as the week unfolds. But tomorrow is going to be really important for the pound. Might get some hints from Mark Carney about possible moves on the pound interest rates, and then we'll start to prepare for the Fed budget. All right, final call for questions. No, nothing's coming in, so I will turn off the recording and look forward to seeing you in the room or at the next update. Bye for now, guys.